Hi, a very good morning to all of you. And yes, this is RN Bhaskar from BKBB, which is an acronym for Bhaskar Ki Business Baatein. And this is a channel that comes to you with policy analysis, with conversations and occasional business stories. But right now, at 8:15 in the morning, we bring to you news behind the news. We take a few headlines that we think we need to be analyzed. And today my co-anchors are Hussaina. Welcome, Hussaina. Then there's Aparna. Welcome, Aparna. And there's Katya, but Katya will join us a little later. And the three of them will talk about the following headlines. The first, of course, is about the economy, about how India's GDP rate for growth is forecast at 5.6% as against 6.5 for Fitch. The second one is about cotton-free uh, exports that are allowed by the government. And the third one is about Groww, about how Groww is coming out with an IPO. Okay, let's take the first story, which is very interesting. Hussaina, could we have you?
Yes, sir. So, India's economic outlook just got a cautious reality check. Nomura has slashed its FY26 GDP growth forecast to 5.8% in the worst case scenario, down from earlier 6.2%. Now, this reflects the growing concerns over the ripple effects of US tariff hikes on Indian exports. This sharp downgrade also stems from a 50% US tariff imposed on Indian goods in retaliation for India's tariffs on American imports. So, in the base case scenario, sir, they assume that if the 50% penalty is removed after November or by November, Nomura expects a GDP growth of 6%. But if the full 50% tariff persists throughout FY26, then India's growth could take a significant hit. And as earlier, we have analyzed how key sectors like textiles, gems and jewelry, pharmaceuticals, chemicals, and industrial machinery, together forming 20% of India's total exports to the US, are directly impacted. And with weaker exports coming in and subdued labor market and investment activity, this drag on GDP may outweigh any domestic policy tailwinds like the GST reforms. Interestingly, despite the growth downgrade, Nomura has retained its CPI inflation forecast, which is stable at 2.7% for FY26. Now, the question that arises, sir, is why? So, they anticipate disinflation, which is a slowing of price rises due to weaker demand and the impact of GST changes. Not only that, sir, they also expect a slight increase in the current account deficit from 0.8% to 1% of GDP, as again, exports earnings are shrinking. Yet, despite these challenges, the fiscal deficit target of 4.4% is seen as achievable thanks to careful fiscal planning and possible credit support to exporters. Now, Nomura projects 25 basis point rate cuts, one each in October and second in December, bringing the terminal repo rate to 5% by the end of 2025. And again, this would be a move to support growth without stoking inflation. So, in other words, India's export vulnerability to global tariffs is again back in focus. And while the worst case scenario trims growth to 5.8%, domestic demand, fiscal discipline, and monetary policy response will be key in cushioning the blow. The larger question, sir, here arises is, can India future proof its economy from external trade shocks in the long run? What do you think?
Hussaina, I'm glad you did the story for two reasons. One, the RBI had said it'll be 6.5. Fitch said it'll be 6.5. And some papers even talked about robust economic growth. Nomura is a reality check. Thank you. That's one. The second part is, as the papers talked about today, the rupee has already crossed 88. It's become weaker. And what is important is become weaker in spite of a weakening dollar, which means the rupee is falling much sharper than even the dollar. And that is why when people talk about a robust growth, a booming stock market, good times ahead, keep your fingers crossed. Thank you. Thank you, Sir Hussain. A very good story. And let's go to the second one, which is also very interesting. And the second story is that of cotton imports, which are now being allowed duty free. Aparna, could you come in?
Yes, sir. So, India has just announced an important move. It's extending the exemption on raw cotton import duty and farm cess until December 31. So, now why does this matter? Because the United Nations, one of India's biggest cotton suppliers, is set to benefit the most. Originally, this waiver was only meant to last from August 19 to September 30. But with festival season approaching and textile industry bracing for high demand, the government decided to stretch it to cover the rest of the year. Normally, cotton imports face a duty of about 11%, so this is a significant relief. So here's the interesting bit. India's cotton imports jumped from 1.52 million bales in FY24 to 2.71 million bales in FY25. With the US, Brazil, Egypt, and African nations supplying much of that, this waiver ensures garment exporters have enough raw material to keep production flowing. Remember, nearly 35 million people in India depend on the cotton value chain, but there's a flip side. While textile exporters cheer because this helps them to stay globally competitive, farmers are now worried. Cheaper imports, they say, could cut into their already thin profits. So, some warn that it might push growers away from cotton and into other crops like soybean and maize. So, on one hand, this move could ease trade tensions with Washington and protect textile jobs at home. On the other hand, it risks unsettling India's cotton farmers. So, the big question is, will the short term relief for industry overweigh the long term concerns for the agriculture? So, sir, what do you think about this? Will it happen? Or what do you think? What are your insights about this?
Aparna, very, very important story that you picked up for several reasons. One, cotton has been the backbone of India's industry right
Hmm.
since the 16th and 17th century.
Yeah.
Remember, in the 17th century, India was the largest exporter of cotton yarn in the world. And David Sassoon's rise to power was not only just opium, it was also cotton trading. And he started using Indian cotton to make Indian textiles.
Hmm.
Now, as you rightly point out, duty free imports for cotton means the farmers will get hurt. If the farmers get hurt, next year we'll grow less cotton and that'll mean more imports. The government has to work out some other mechanism. Maybe it has to work out a mechanism by which it can give the exporters a subsidy without importing cotton. Or it should make sure that Indian cotton is given, the cotton growers are given a facility. The government always tries to protect industry at the cost of farmers. It has happened in edible oil. It has happened in sugarcane. It is happening elsewhere also, and now it's happening in cotton. India needs protection, but the answer for the government of India is not to look at the US, but to cultivate other markets.
Hmm.
Russia has agreed to pick up some of the cotton textiles that India has. The whole of the Southeast Asia waits to be developed as a market. India is blissfully ignoring those markets and is totally dependent on the USA, which is disastrous. Anyway, that's India. And that takes us to the third story about Grow's public issue. Can't you come in?
Yes, sir. So basically, it is expected to be the biggest fintech IPO because the last valuation fundraising valuation was around $7 billion. It could have grown to $8 billion because its profit has been going up. If it's a 10-15% dilution, we are just looking at 700 to 920 million dollar IPO. So it's going to be a mega IPO. We all know about Groww. Groww is actually one of the zero, the up stocks, a company like that. It's an online broking company, stockbroking, investing company. So what is interesting about it is the number of subscribers are around $12 million. There's good huge volume in the market. In fact, NSE market shares 26%, a quarter of its volume actually comes from Groww and its subscribers. And it also has a very good presence in SIP market. So it's grown real fast over time. It's been there, but what kind of value it can offer to the companies is a little suspect, because like as a lot of investors have recently pointed out, a report has come in which said that startup IPOs have never been really great for the retail investors to actually subscribe. And we've seen a few success stories like Zomato, etc. But those also came a little after a little gap for patient investors, and it was cover patient, and not all of them have replicated the success of Zomato, is what it is said. So. Its peer is actually Zerodha. Zerodha is a lot more popular, but Groww is a much bigger player in the market. Its IPO has been approved. So what do you think, sir? You think it's a good idea for these investing companies, more startups to come into it? And second thing is, what kind of value, when you come at a valuation like this, $7 billion, $8 billion, what kind of, do they leave something for the retail investors on the
See,
table?
I'm a little worried about two things. One is, should a fintech company go public with such a large issue, or should they be
Right.
a stepping stone for discovery of market prices? That is one issue, which is a policy issue. The second issue is that this is a time when the investment climate in India is getting to be bad, is getting to be constrained. Not bad, but constrained.
Right.
The markets have already suffered losses again and again. The climate for investment is poor if FDI is not taking place. And the third factor is the consumption is not great things to write home about. And in the face of this, when you go public, will the market be able to sustain this public issue? Such a large amount of money to be serviced. I'm a little, I keep my fingers crossed. Anyway, but that's a market. Let's go ahead and look at this next part of today's session, and that is questions and comments. But before I go there, could I make a request? Do click the subscribe button if you have not clicked it already. And yes, do click the like button. That's very important for us. And the third one is the most important. Please tell all your friends about us. We are growing, but with your word of mouth, we shall grow faster. Thanks again. And now let me go in for the questions. How long can the intervention of the RBI for rupees to INR can be sustained? Well, you see, it's a situation where whatever you do, you are in trouble. The government believes that the markets can be very, very, very good, and has already talked about a situation where the market is, how do you describe it? The government believes that the market can be very, very good. But when you have a rupee that is falling, in spite of a falling rupee, it means inflation is just around the corner, which means that the numbers will be even more dismal than what Nomura has factored in. Inflation is something that kills a market, that kills a country. And my fear is that the government has not taken that into account. And that takes me to the second question. Why are Indian cotton farmers not efficient enough in producing cotton? Indian farmers can be efficient if other inputs are also efficient. The cost for Indian farmers is very high. And that is why the production of cotton is also high priced. India does not believe in BT. And wherever it's been allowed, there are disaster stories. And the price at which BT is available is also prohibitive. As a result, if the farmers' input costs are high, and many of these input costs have government taxes in them, remove all the taxes, the Indian farmer is as competitive, perhaps even more competitive than Western growers. It all has to do with government pricing and where the government loads its taxes to get money out of everywhere. And the first one to be sacrificed is always the farmer. And that brings me to the third question. What do you think the market sentiment will be when it comes to responding to the Grow's public issue? Well, Katya will reply to that. Just a caveat: we don't predict markets.
We don't predict markets. Yes, I was about to say that nobody can predict it.
Nobody can predict markets, how markets will behave, how markets will react. We can't say that. But yes, there is a possibility that Groww may face challenges. But Katya, it's your story.
It's a big sized, so actually, yeah, no, okay, and right now nobody definitely can predict and must predict markets also, because things are happening by the minute. But IPOs have had a very different journey. So for larger IPOs now we'll have a lot more HNIs and QIBs participating for it. So and it's an online, it's an internet based company, so there could be a lot of funds interested in it also. Like you said, we have a lot of mutual funds who are full of cash. That is one. Then second thing is that there is a lot of interest. It's a brand name. Groww is a brand name for a lot of people who invest in the stock markets. It has a double and dual advantage. So a lot of young people invest via Groww into stock markets. So when you do that, you actually know and see them as a brand. So it could be possible that they could be moved by the brand. It might see a certain amount of retail invest, but where the market will absorb such a big issue, $700 million will come, is the first question. And second thing is, in this market they might truncate it also. Now they are trying to change the rules for very large companies to change the rules of 25% as well. So there are other things as well. So we do not know if it will come in the first place in this size. And second thing is, we can never predict how a stock market will react. But when large brand name startups have gone and the market is decent, they have always received a very good response. Even now, it's flip flopping, but a couple of IPOs have listed in a very decent manner. But Patel Retail at 20% listing gains, so it's not
Yes,
a bad market. So
you're
that
right. It all depends on how the market perceives the situation. And yes, you're also right that if such a large amount, such a huge amount of money comes to Grow, it'll be invested back in the market. The markets could be propped up once again.
yeah.
But let's see. Uh, and that takes me to the end of today's session. Thank you very much for being with us. Today is the last day of the week. You have a long weekend. Enjoy the weekend. But yes, do tune in on Monday. We'd love to see you once again. And for today and for the weekend, have a wonderful time. Take care.